So Wall Street, as everybody knows, plays an outsized role in the American economy. Finance has come to equal about 22% of the American economy. And this is very different than the 1980s when manufacturing was about 22% and finance was about 11%. These two numbers have switched over the decades. So Wall Street has become quite important. But having gained that position, it's also highly dangerous. So what I'm specifically talking about is we are going to eliminate financial speculators from the usable commodity markets. This is one reason, if not the major reason, why oil and gas prices are at astronomical levels. It's very simple. As the voters may know, I have spent quite a bit of time in my career on Wall Street. Up in my home office, I have a New York Stock Exchange type of trading system. So if you've ever seen traders on the New York Stock Exchange, the system that I have in my home office is even better than what they're using on the New York Stock Exchange. So I see the data points every second the market is open. I know the cause and effect relationships. And what we're saying here is in the commodities markets, financial institutions and speculators and everybody with a lot of money in their pockets have piled into the oil futures contracts, as well as wheat and soybean, and of course heating oil and gas and lumber and all the industrial materials, things like silver and platinum. And there's a problem with that. There's a very big problem with that. And it's a very simple supply and demand issue. And the more demand you have for something, in this particular case, we have a lot of artificial demand because of people gambling, essentially. They're speculating on price movements. The result of that is it pushes up prices for oil and the other commodities. Now, we would think that would not be a big deal, but essentially what we have right now, as we talk on this video, is we have millions of people literally putting millions of dollars in their pocket from speculation at the Chicago Board of Exchange. That's where the futures market is. And in the past, there have been other administrations that have tried to eliminate speculators from the futures market because it's a known problem. And it just now, at this point in history, its effects are even bigger and more disastrous for the community at large. So the Quigley administration, we are going to eliminate all speculators from the usable commodities markets. Of course, we will let speculators play in the indices, and we will let them play in gold. Those types of things, even though gold does have a use, it's mostly in jewelry. There is some in electronics, but it doesn't have a society-wide impact that, say, oil or gas or heating oil or say, lumber or platinum or silver does, just as examples. So that has to be done. It has to be done quickly. And then when we eliminate speculators from the futures market, and let me just define that really quickly. A speculator is somebody who does not take delivery of the commodity. If someone is in the business of working with those commodities, processing those commodities, buying and reselling those commodities, they're doing what we call taking delivery of those commodities. Those people will be free to trade in the commodities. No problem there. So the immediate result, put it this way, the day that I am sworn into office, if that evening, the very first day in the White House, I sign an order or law that removes speculators from the commodities market, oil prices and gas prices will immediately cut in half. They will fall down to something to the $50 to $60, maybe $70 per barrel level. And the reason why I know this to be true, I mean, I have been a commodities trader. I still dabble in the field when I have spare time, but of course, running for president, you don't have spare time to do much. But when I do, so you can see very clearly what happens when you take the demand out of the commodities markets. We see a crash in price, and the world needs lower commodity prices.